we'll start with a few questions from myself to warm you up, and then you can ask some questions yourself. So let's start. You already mentioned some of you KPIs. I guess some of you might be thinking of doing initiatives like you. What are the KPIs that the board or your bosses are expecting from you? Can anybody share some KPIs or metrics of your success for this year or next year?
Okay, so probably I will continue. As we just said, we've got two main KPIs. So one of them is to educate the product owners and the teams who are not working inside the department, but they are product teams with no silo attitude, with the agile mode of working, familiar with Google Design Sprints, for example. So this is one of the KPIs. The next one is introducing technology in the places where they are needed, to support the digital transformation of our bank. I'm not sure these are steady figures. Not sure. No, these are not steady figures because we are agile, so we need to check what's inside the company. So I would lie to you if I would say that we've got, let's say, 20 product owners to be produced in half a year, or to 6 implementation in a few months, because it's not about the number, this is about the quality.
Kamila, can you share some?
So our department is pretty new. I guess this year we mainly focused on actually setting it up and bringing the first projects live, hiring people, because we really started from the scratch from the beginning of this year. But we have the numbers in our digital rebel strategy. Maybe some of you know it. It's 20 partnerships by 2020. So whether the partnership is the business model of cooperation, technological integration, or the investment, it's all like depending on what we're gonna probably do. But we're getting there. We are setting up the tools this year, and and the next year will be probably full of very strong KPIs to do out of the tools that we just set up.
Mm-hmm. Balazs, can you comment on?
Since we have just began with the journey, we do not have KPIs, but I think
lucky you.
Not at this stage, but I think we have a huge learning, because within this elevator approach, you have MVP, you test and learn, you try to scale up, but once it goes to implementation, so getting the idea out from the MVP phase, and then with your IT security, with all of the issues which were mentioned here, we are still not in the agile way. So in case of implementation, I think we are still missing some knowledge. In terms of elevator level, in terms of test and learn, we are quite okay, but we simply do not find the bridge from the idea to real implementation around these 40 markets. It is still what we are still struggling.
Okay. We've mentioned already, I guess most of your presentations have mentioned that we work also on the culture, especially we've seen that with BNP, pushing the elephants, working with purchasing and other departments. What are the prerequisites on the bank side to really get ready for startups, get ready to make use of it, not just to meet them, but to turn the dating into deals and value for customers and the bank?
I think the code, your presentation showed it very clearly, and I think I mentioned that also in my presentation. Well, we need to have a clear use case of the solution, and so like startups usually speak in the language of technology. We speak in the language of business models, revenues, use cases. So we need to kind of try to figure out the same language, and this is like one of the preconditions to tell us what's the use case, not what's the technology, from the startup side, I would say. From our side and from the startup side maybe as well, it's the regulation. I think if the startup could know like what are because there are things that fintechs can do and we cannot do. And by integrating fintechs, we cannot actually use this solution. So we had pretty few challenges. We had projects that were going on for 6 months out of our acceleration programs, and then after 6 months someone went to KNF and said, oh, this is not the good infrastructure, actually we should move on to the on-premise version, and then the business case failed. So these are the lessons learned. So I guess the preconditions are regulations, use case,
I would just add that we need a strong and defendable why, and why is not the nice why that the market is evolving, that we should follow the future. Okay, it's the hard business to sell it this way, and it's for sure true, but for us it's not a business truth. We need a strong and defendable why, so we can show the figures, so we can address the issue. And at first, to be honest, we smuggle the startups, the fintech, the innovation inside the organization. So when it hurt so much you couldn't stand the pain, you took anything, even a startup. So the guys in sweaters and flip-flops, as they were imagined by the organization. So this is our way. And the second thing, we also mentioned this dedicated and cross-functional team. So this is very important. So the IT security, the compliance, the people who would normally spoil your business in the nearest future, you should onboard them as fast as you can, so they will be the part of the team and they will not attack you. They will see the solution as their own.
I have a question, maybe to all of you. The work you're doing, what's like the majority of your day looking like? What are you mostly spending time? Is it mostly searching through databases of startups, or are you mostly negotiating with the internal organization or with startups? Bring it closer if we want the whole team here to do more of it.
So the first...
Tell us, are you just drinking beer with startups or what?
We'll be answering very stupid question from all over the organization about the invoices, about the agreements, about what you were doing last summer. So any kind of very stupid question coming to us and we are answering them. So this is the first spontaneous answer. And the second thing is not very smart, but discussions with people why, explaining them why we should do this way. And when we are coming to the conclusion, the people from the other side are changing, so we are firing somebody or there is a structural change and you must repeat the process. So to be honest, sometimes I hate myself from saying the same thing again and again and again. So I feel like a teacher in a kindergarten sometimes.
Actually, sometimes we say we are doing the structurized marriage counseling, yeah? So we are counseling the business owner or the business line with the startups, probably with the colleagues from IT security or IT architecture or procurement, and try to fix the problems. And there are a lot of problems inside. So you know what we are talking.
I have completely different days than you, because I'm not struggling with the why, I'm not struggling with the what, but my pain is the how. Just an example, Hungarians are laughing at that corner of the of the room. Since we are a group, okay, SME online account opening, how to open an account without the customer getting into the branch, so remote identification, that's the thing which we should solve. It's not so difficult because there are providers, there are local providers, but since we as a group, in the last 8 weeks, we were simply not able to decide if we should go with the local provider or we as a group, we should develop as our own. So what I'm doing, I'm trying to convince the local management, the Viennese management, the IT management, the IT security here and there, and the business is simply begging that guys decide. So you are the owners, so please decide. And the funny thing is that since we in the last 2 months were not able to decide, the implementation of the whole should be 7 weeks. So the implementation is less much effort than to make the decision. So that's my pain point here, that we know what to do, hopefully we know why we do that, but how we should do, we are lost in that case.
Maciej?
I actually had a thought on this because it really comes down to different value of time on the startup side and on the corporation side. My last job before I left the corporate world was working in a regional structure, a big one, a lot of countries in it, and people working in the regional office, there were about 400 of us. And there was a moment when I realized that we don't need the entities that we manage, because we spend the whole time talking to each other and trying to sync. And that was the moment when I realized I cannot do this anymore. And that's really the reason why this happens. And I really understood it when I came here, because time is valuable when you have a smaller business and you pay, salaries to less employees, and you actually have to think about salaries. In the corporate world, you don't think about salaries, you think headcount. I'm not having enough people, but I don't care how much I pay them. So when you have a meeting and 10 people come in and just one talking, doesn't matter, right? And when we have a meeting here at the Heart and I have 10 people of my team, I'm thinking, what the hell is happening to the business that you're supposed to bring? And why are you 10 people here? So I'm very well known at the Heart of not coming to the meetings at all, because I value time so much. And when we work with big corporations, we have to learn, and that's a big lesson for the startups, because they fail to understand it, and they usually underestimate the time they have to spend talking to big corporations, is that they don't value time. Sorry to say this, but time is time. There was a big philosophical debate on time, and then there was this. They came to this, and I think that that's a big lesson to learn by corporations, to understand that startups, they don't have enough time to wait. And to wait for the decision, but also to wait sometimes for money, because the invoices are going through the process, and it's not, it's 45 days in the agreement, but in reality it's 3 months, or maybe 4, and in the meanwhile they have to pay all the salary. So this is something that I think should be understood, how to manage time when working with startups. That's my big constatation. Sorry.
Okay, any questions from the audience? Okay, you just need to speak to the black thing. What? Sorry, sorry. That wasn't the answer. Yeah, speak to the black thing. Yeah, the black. Yeah.
Okay. My question is on the legal part of your relations to the startups. Do you enter into the equity to sign any service agreements, or you buy licenses? And are you doing it from the balance sheet of the banks, or you have any funds that pay and resolve all these legal issues?
Great question. Thank you.
So as for today, we are not going into equity. We are just treating startups as vendors. So we are assigning either a license agreement, either buying a solution from them. So this is a tool, not a goal. So we are cooperating with startups. We are buying from them, and this is it.
Same here. As for today, we mostly treat partnerships as a technological integration, whether it's a license or other model. But like I said, we're building the VC fund, and we're also thinking of different way of cooperation with startups. I don't want to make any spoiler, but stay tuned.
We have both options. After the first round of the elevator lab, we created a separate legal entity who is able to offer capital to the startups. And on the other hand side, we could make some contracts, partnerships on the group level and even on a local level.
Any other questions? Watch out.
Hello, so actually I do have a question. So I just realized that the force of your organization actually competing with each others. So do you have difficulties to actually attract startups? Because if I'm setting up a startup, I have either the choice to work with the Earth, or with Raiffeisen, or with Alior. So how do you attract them, or do you convince to basically come to you? And I understand right now you treat them as vendor, but do you really consider investing in the startups to help them to grow, and also to put your own money? Because like Maciej said, time is really important for startups. You always have limited funds, and you want to scale up, otherwise you're gonna die. So you have to pick up your right partner at the very beginning, right?
Maybe I'll go first. Actually, I won't lie if I tell you that some of the startups that were shown today are working in different banks, and we are not having any problems with that. Yeah, so no matter if the startup is working with us, and actually in the same time, for example, is talking to Alior. Okay, this is part of our job, yeah, to be fast between the teams, yeah. But this is good for the startup actually, yeah, because they need to be alive, they need to have money, they need to grow the teams. So actually I think this is good for us when we know from each other that the startups actually was talking with that bank and this different bank, because this is like an additional market value, yeah. If those guys are talking with them, there is something into that, yeah, so we are more secure.
I would also say it's a kind of a healthy competition, and I would also agree that startups, they choose acceleration programs. Sometimes they attend more than one, and we had accelerated Limitless already in the previous edition. All right, Beiki also was on the short list in this edition. So like we know the startups from other acceleration programs, and well, if we see that something works somewhere else, we're also more and more interested. Of course, we want to be the first on the market. We want to say that, oh, Alior implemented this as the first one. And you asked about the equity. We're also thinking very intensively about this. But in the end, it's not such a big environment, so we know each other, we know startups. Sometimes you go to the conference and you see the same people that you saw at the conference before, right? So let's be honest, we are looking for the best solutions for our business and our customers.
We're saying as well, we can work with the same startup, but the business cases are different. Yeah, so remember that the banks are different inside, so the use cases are quite different. And we are not easy partners, yeah? So we are not easy partner for any other startup, yeah? So again, this is not a part of competition, this is a part of the diversity of the business, yeah? To being secure for the mind and for the perspective of the startup, yeah? To talk to us and, for example, to Alior, because he or she, the founder, has no idea who will pay first.
And what I wanted to add is, I don't remember. Anyway, yeah, you can work in each of us, to be honest, and we're okay with that. Right?
Yeah. I'll maybe make a comment as well. Just coming back to the first question about KPIs. If we look at the KPI, like maybe you guys do, because you have specific teams that are responsible for that, 20 by 2020, so we have to find that many startups. Probably we will be competitors in some ways, but first of all, I don't agree we're competitors, because we're looking for, all of us, we're looking for startups working together, by the way. So that's one thing, but we as the heart, we don't look at KPIs like this. We work with your management boards, we work with your CEOs very often, and we understand your challenges at a higher level. How do we improve our close rate of something in a specific channel, of some product in a specific channel, or how do we decrease the cost and so on. And if we find a way to do it with a startup, we then go to the bank and say, look, we have an idea. And so startups for us are not a goal by itself, which means maybe to some of you it's a bit harsh from our perspective. As a heart, we don't work with startups as part of our business. We don't even charge startups for coming here. We don't take any money from startups. We work for corporations, and we find startups on the brief from the corporation. And it's not, find me 20 startups doing that. It's, decrease my costs X, increase my close rate on, cash loan online by X. Allow me or find me a way to do the KYC and onboarding in the mobile app. That's the job that we're doing, and then we started looking for startups, and then we bring the startups to the corporations, and then teams like this one or that one, they take over, and then we say we're done, this is our job done. So we're not competitive in this space. We don't really want to work with startups on a daily basis. We only meet startups when we have a brief, and then we start a project, and then we invite them to answer the brief. There is very few cases when we have an event where we invite startups to work with them on some solutions, open solutions. We always have a very specific case.
Any other questions? Again, you'll bend forward for the frequently asked questions.
That's an overachiever.
Yeah.
The next question is about time to market. How do you think in the SME segment in your country or in the countries where your group is presented, and between the solutions that startups are trying to provide you, is time to market is a crucial point? Does it really gives you possibility to take some market share that you wouldn't get if you would realize it in more slowly situation? Is time to market a crucial point in this segment and in the solutions that you are looking at the moment?
I would say that for us it's not crucial because we are the one who are delayed. So the bank don't manage to deliver the solutions for the startups to onboard, to implement the solution and go to the market. So startups would be ready in 3 weeks, 5 weeks. That depending, of course, on the solution and the complication level. But generally speaking, the bank is too slow for the startup. We set up the time frame 3 to 6 months for a POC and to decide to kill the solution or to go for the implementation. But this is something new to us. We will test this window if it's appropriate. So time to market is not crucial, but on the other hand, we are not talking about groundbreaking innovations. We are not introducing second Revolut or a Facebook of payments or anything like this. We are now delivering small solutions to be better, but not to break the market in any way.
So we are more talking about efficiency, optimization, automatization, and so on.
I would say time to market is important, but this is why in our acceleration program we said that we only take MVP stage projects, but in the end when we decided to accept 2 startups that are still working on MVP, we decided that because we knew that before we started the implementation they will be probably ready. So that's the first thing. The second thing, in SME segment we have Zafirmowani platform. It's a platform for SME where we can pretty easily do the POCs and test the solutions of the fintech, of the startup projects. So we can easily integrate it to do the POC, and the third thing to help us to make the decision about the implementation. And the third thing is that in the area of numbers, I think the break-even would be more important from the business point of view. So the business case usually shows that after some time there is a break-even when the solution starts to earn for itself. So that would be the important number in the decision-making stage.
Here I have a completely different view, because I think not the time to market is important, but it's important if you are first in one topic or not. I think the goals which we should deliver in the next 2 years are quite the same. Somehow we should do digital lending, somehow we should open those accounts fully remotely, and we should offer some beyond banking services. So this is the 3 areas where we are focusing. What we see regionally, for example, let me raise the digital banks from Russia. If you see what is happening on the Russian market in terms of acquisition, you could see that these challenger banks who went to market within 6-9 months, they now are, let's say, covering 30, even 40 or even more percentage of the newly established acquisition within 1 or 2 years. So they were first, they created something, they created a new market, and they simply beat the old traditional players. In terms of digital lending, we saw some nice works from or cooperations with Cabbage, with Spotcap. So platforms are already there, although they are struggling because they do not have the banking license, but still platforms and solutions are already available. The question is that who will be the first one on the special markets who really can implement that? And that one, I truly believe that it can be, let's say, simply blowing up the whole market. Just another example showing on the colleagues, somebody in the CEE region already was able to integrate the platform, meaning showing the cash flow, doing invoicing and doing accounting within the same solution. Each of us is simply struggling how to capture that first one, because within 6-9 months he gained so many, let's say, credits and so many huge penetration that we are simply, as a followers, we never ever will be able to catch him. So I think that's the crucial thing, to be first on the core activities where you are focusing on.
So you think that you focus on the solutions that will help to get some share market if you go first?
Yes.
Let me have a closing question from my side. You've already mentioned Bankovo, and we know ING set up Alior some time ago. Millennium here in Poland set up Goody. We're seeing more and more of startups or fintechs actually built by banks or insurance companies. Do you think we'll see a wave where banks and insurance companies get so agile that they can actually compete with fintechs and build their own brands and their own new business models? Or do you think the partnerships and the investments and acquisitions will have to remain the more effective way?
I think it would be good if we would be able to act so quickly, but I think that the most possible way for the future years of working is the partnership between the banks and between the startups, because it makes a lot of change in the mind of the board, in the mind of our CEOs, and of course, let's say, to feel safe with the in-safety-ness, yeah? Because actually you're building a startup, yeah, so you need to accept the potential failure. So I think there's also this kind of possibility. We'll see what the market will give us, but I think that still we have a lot to do in the part of partnership, strong, effective partnership between banks and the fintechs.
I would say that in the end it doesn't matter, because when you're establishing a spin-off startup or fintech, you need to hire new people who are able to do this. So we are doing kind of the hard job, kind of a VC job. So at the end it doesn't matter if you will do a spin-off and send your best people away from the organization in a vehicle dedicated to bring revenues, or you will partner with already existing very nice team with a great idea and great technology. So in the long term, it doesn't matter.
I wouldn't agree here, because I think, at least in the case of Alior Bank, if we know that we're strong in particular area, like loans, like FX, which is, we're really strong in FX, we will make this competitive advantage, and we'll try to set up a fintech, and we'll try to go on the market and see how much we can win. And we don't see that you can build, of course, partnerships around it, but the core product, the core engine will be our like strong products that we have built for the last 10 years. And so the case of Bankovo, it's the market for loans. The case of the product that we're building to the European market is mostly based on FX, our countervalue and EFX trader. Although they are our products named Alior Bank, they could be easily actually, if we had that strategy that time, like in 2012, they could be easily a separate fintechs, like especially countervalue. It's totally separate platform. You don't have to be the customer of Alior Bank to have it.
But would they
Yes.
survive on their own with the cash flow generated right now?
I think so. I think they would be more, more agile, they would probably implement new functionalities faster, and these are the advantages, I would say, that you're more, you don't base on the bank's IT department to implement anything. You do it on yourself, right? Of course, the costs might be bigger, especially in the beginning, marketing costs and the awareness of your brand, your bank's brand is different, right? Not many people know that Bankowo is Alior product, so they need to fight for the customers kind of on their own. They're not really supported by Alior, by this brand, right? So it's a harder start, I would say, but it can have a really nice payoff later.
In our case, I think the situation is different because on a network bank level, on a local level, you can develop things fastly and quickly, even on your own. Even locally, you can partner. In a group level, just to create even the mid-layer platform that a second or a third or a 14th country could reuse the same solution, product, functionalities, doesn't matter, even that takes years, at least for us. That now we decided that try to partner with the startups in that way that we as a group should create the platform that the real usage could be somehow simplified, and most likely in a much more fastened way we could implement something in a third, second, etc. countries. But creating the platform simply it's not easy. But at least the work started, so it's a kind of question of implementation.
I struggle with this one because I think that in some form of shape, big corporations will have to innovate and create new channels, new startups. I don't believe, I don't want to judge on the Alior and the Goody and so on, because some of them are great, some of them are less. Certainly you can speak about success or no success, but it doesn't really matter because it will have to happen. So what I do believe is that they have to stop doing this the old corporate way, which is we set up a project, it will last for a year or two, it will then be prolonged because it will be late, it's going to be 3 years, and then we pray because we spent 3 years working on something that's really expensive. In the corporate world, it's 2 or 3 times more expensive than in any other world. And if you don't succeed, then the whole project falls apart, and the CEO will have to, embrace it for 2-3 years before he allows to create a new project like this. So what we do believe at the heart, and that's how we try to work, is building things out of components. So that's one thing. So it's much less of a cost at the initial stage. And second of all, to apply technology, methodology of creating new ideas and startup and testing them on the way. So basically, the typical, the Google approach, POC, MVP, and so on. So, you pray more often, but for shorter periods of time, and you spend less money. And
you see if the prayer has worked.
Exactly. So I do believe that this is the way, and no other way, because once you build a big animal like Goody or Alior, and I'm not judging at all, whether they're great or not. I'm just saying that once you build a big animal like this, then you have 3 options. One is success. This is great, but then it's not such a great success, and then you have a big animal to feed. And what do you do with that? It's very difficult to make a decision at the corporate level to say, we failed, we're going to kill it. So either you keep it alive, and then it's going to cost you a lot of money, or you kill it, and then obviously there will be a lot of jokes between your colleagues on the market. So I think the old way of doing these projects has to stop. Otherwise, you're not going to move forward as banks or insurance businesses and so on. it's just not going to work because money is never a problem, which in big corporations. When I started working for AXA, I was a very lucky person. I was working in a group of 12 people working on transformation of AXA and globally. We had almost 1 billion euro to spend in 4 years. And I'm here because we didn't manage to spend the money. Because of the rules and so on. So money is not the problem, it's the methodology and the approach which has to change. That's my sum up. Thank you.
Okay, we are out of time, so thank you very much to our panelists.